Welcome, Wonuola.
Thanks, man. Well done.
What else is there to talk about beyond bonds and FX? What else is happening? Wonuola, you don't like to touch on political issues.
Nah, we're a very conservative bank, right?
Yeah.
Yeah. So I can give objective views, right? But we typically try to shy away from all of that.
I got you.
Start your day the grown-up way, right here on Smooth Breakfast. Always fresh and highly informative.
Do you know that COVID-19?
All right, Rotus, we're live on YouTube now.
Coronavirus typically attacks the human respiratory system. This is why you must keep guarding against contact with respiratory droplets from sneezes and coughs through social
Good morning,
distancing.
everyone. Thanks for joining us today for Business Express 981. Just playing a commercial before we start.
Remember to stay hydrated.
Feel free to leave a comment here.
Don't entertain visitors for now,
join the
and do
conversation.
the responsible thing by isolating yourself if you've been exposed to an infected person. It is important to obey the stay-at-home order, as this will greatly help in containing the spread of the virus. One more thing, don't panic. Spreading unconfirmed news about COVID-19 will do more damage than good. Together as one, we will kick out coronavirus. This message is from Stanbic IBTC.
Business trends beyond the headlines. Business Express on Smooth 98.1 in association with Stanbic IBTC. Stanbic IBTC. It can be.
Good morning and thank you for staying with us. You're tuned in and listening to Smooth 98.1, and for those on YouTube, you're watching Smooth 98.1 here on YouTube. To subscribe so you'll be the first to get a prompt when we get on live. Go to youtube.com/smooth981FM Lagos, subscribe and follow. And we have Rotus here this morning for Business Express 981. Good morning, Rotus.
Good morning, Valentine. Good morning to all. And of course, good morning to our special guest.
Yes, Wonuola Akanbi from Stanbic IBTC. Good morning, Wonu. Welcome to the show.
Good morning, guys. Good morning, Lagos.
Thank you so much for joining us this morning. Wonuola Akanbi is the head of financial institution sales and global markets at Stanbic IBTC. To join the conversation with Wonuola and Rotus, please send a message through WhatsApp to 0809 444 0981. That's 0809 444 0981. You can also tweet at Smooth981FM with the hashtag Business Express 981. Feel free to leave a comment under the YouTube video or live stream. Rotus?
Oh, thank you so much. Wonuola, can you take us through most recent bond auction with respect to how it played out, subscriptions and so on, marginal rates and so on?
Yeah, thanks, Rotus. So yesterday we saw the DMO raise a total of 262.1 billion naira in volumes across 3 bonds. They had initially offered 50 billion of the March 2027 bond, 50 billion of the 2025 bond, and 50 billion of 2045 bond. So basically they offered a total of 150 billion, right? However, it was grossly oversubscribed. We saw a total subscription of about 333.48 billion, right? But they basically sold 262.1. So they basically sold 112 billion, above their total offer. Stock rates were on the 27th, 10.5, and on the 2035s, 11.5, and on the 2045s, 12% yield. So if you compare it with the previous options, you see that rates are basically, in the upward trajectory.
Great. Thank you. I was going to ask about the comparison to the last auction. So what's driving our subscriptions?
Yeah, it's a mixture of many things. So ahead of this auction, I mean, we did see a lot of brokers and even banks, opening short positions because of, because we're expecting the rates would print higher. So they had sold, at lower rates, and then, they came to the auction to buy higher rates. And then the second set of guys, driving the auctions are predominantly the PFAs, and the asset managers and some insurance companies, who have excess liquidity in cash. And and obviously liquidity coming from bond coupons, we've had a couple of those coming this month. So all of them were basically just reinvesting their cash. But in fairness, it's quite surprising that the demand was pretty much high, because if you compare the results to where the secondary markets are trading, they're not so far off. So I think DMO really took the opportunity to basically sell a lot and fill up a decent size of they sold over 100 billion more than they plan to do. So that's massive.
So what adjectives you use to describe sentiments for, I guess, bonds right now?
Yeah, so if you look at it, like everyone had expected that rates will continue to move wider. So taking today, for instance, I would expect to see a bit of mixed reactions. I believe that the market will open with traders defending their bids. You probably see offers slightly lower than where the auction price printed, but it's clear that the expectation is that rates will continue to go up. As government try to basically borrow more, right? So it's just expected that for them to get the size they want at the auctions, they would have to basically increase rates. And also, if you look at the money markets as well, there isn't a lot of liquidity there, right? And that again is going to be a catalyst, for rates to basically go up. So if you look at banks generally, they've been selling down their special TBILs, to asset managers and PFAs as well, and we've seen, those rates go as high as 6% on the 90 days, and as they continue to do that, it basically disrupts, the kind of demand we see, in the bonds. So people basically still piling cash on the short term and continue to wait for this auction, to print higher, and then they reclassify into the auction. So yeah, so the general sentiment is bearish. It's expected that rates will continue to go higher, but we will see it is, basically towards the auction days, you start to see rates go higher.
Great stuff. Great stuff. Would one say that what we're seeing in the T-bill space with rates, gradually inching up, is that being replicated in the bond space as well?
Yeah, sure. And bills are even shorter dated, right? But bonds are longer dated. So you'd want to make sure that you're getting a fair value in whatever you're investing in. It's still a far cry from where inflation is. However, it's all about supply, right? And if the government needs to borrow bonds, in order to basically cover their deficit, the expectation is just that they can't keep borrowing at the same level. So it's a lot of demand and supply. So as they supply more securities, you expect rates to basically continue to inch higher.
And so I guess if one looks at the equity space and look at, I think the market was up yesterday, but if yields on T-bills, money and fixed income, as those climb up, it wouldn't be expected that some people might move funds from equities over to fixed income.
Well, it really depends on their view, right? So now, you've seen a lot of results. People probably get their dividend yields and everything. But if you really compare, what the bonds offer, I guess some might still stay, in the big names in equities where they basically see value. But again, as yields continue to inch up on the bonds, you start to see people then reclassify, because obviously fixed income is safer. You could reclassify them to HTM for like held to maturity, and lock into those yields. So so the way I see it, as you see new levels on the bonds and T-bills, you see new buyers, basically. So and again, people will definitely buy everything at the same time. They just keep, cherry picking, and as it move higher, they just keep going with the trend, so that they have a balanced weighted average.
Great stuff. Can we discuss the ever-present questions or comments? Val.
There's a question and a comment. First, the question, Olowo Olarinwaju on WhatsApp says, good morning, but please, what's the prospect of Sukuk bond issue this year?
So yeah, I mean, we've seen an issuance already, and obviously those are more infrastructure based. So we could probably continue to see more, but it's likely depending on DMO. I mean, on how they want to issue the mix of the bonds. Yeah, but it's really more discretionary with the DMO. We've seen one already, and we'll probably expect to see another one much later in the year.
All right. There's a comment here from Otunoga and Ajay. It says a cement manufacturer recently issued a 5 or 7 years bond at 7.75 or 7.5%. The offer was massively oversubscribed. How wise is it to invest in such an offer in view of rising rates, as you just described now?
I mean, again, like I always look at it as time value, right? And if you look at what the PFAs have done or asset managers have done currently, because they expect higher interest rates, so they typically tend to keep it short term. So that's typically my advice for most people, because if rates in the T-bills are going up, then you can always just pile up cash there and then wait for bonds to go wider. So as the bonds continue to trade wider, then you can then reclassify, right? Because I mean, if it's so like banks were selling special T-bills up to 6% for a 90-day investment, so you can put in your cash there, for some time, and then wait for rates to keep going up, and then you keep reclassifying. Like again, you can never buy everything at the top, but it's always good to just keep averaging out at the best levels you can.
Great stuff. Great stuff. All right. So now to FX. I guess it was discussed at the MPC meeting. We had our finance minister's comments about NAFEX. Wonuola, what's the latest, if anything has changed at all in Nigeria's foreign exchange space?
I mean, nothing has really changed, right? So we've seen a lot of investors still on the sidelines. Obviously, a lot of them still trying to get money out. The ones that are out, are still looking for more flexibility in terms of the exchange rate. So there's really no clarity, to say, okay, if I come in now, can I go out in 6 months? Can I go out in 1 year? So it's not really clear in terms of the exchange rate mechanism, to raise those doubts, because remember, I mean, on the backdrop of the whole COVID and oil price drop last year, a lot of investors were trapped since March. Some were able to get out their money from August. CBN started selling again in August, and some were able to get out their funds. But we still have, an estimated of about $2 billion, looking to leave the economy. And if the exchange rate mechanisms aren't clear for investors, it would be difficult for you to see any liquidity there. But in terms of the market generally, market is range bound around 409 to 412. And the FX is printing at 409. So we'll probably remain there, for some time, and till maybe CPN changes their views. Turnover has been abysmal. We're seeing an average of about $30 million daily, and those are pretty much match flows from different corporates. Multinationals inflowing into their subsidiaries, and they using those funds for their obligation. But CBN is a major player. We need to still find a better mechanism that will definitely, attract investors.
It never ends. It never ends. It just continues. It's an issue that the central bank has to address, and it continues. As the PDD said, the saga continues. How much time we got left?
Done.
Wonuola Akanbi, thank you so much for joining us again. The head of financial institution sales and global markets at Stanbic IBTC. I appreciate your insights. Thank you, Wonuola. Thanks to everybody for your messages and comments as well.
Yes, and
Thank
thank you, Wonuola.
Val, thank you so much, Val.